Hello, today we are solving Jan 2023 IAL Unit 2, question number 6, part 3. What is the dividend yield? Let's calculate the dividend yield. The dividend yield is going to be equal to, the dividend yield is dividend per share divided by the market price of the share times 100. So, it is dividend okay, per share issued, okay, per share divided by what is the market price in terms of market price per share, okay, times 100. What is the amount of dividend that was issued in terms of its market price? Okay, so then we can say this is the amount of dividend yield it's giving. It should be usually higher. So dividend per share we had already calculated, it is 4.5 pence per share. So 4.5 pence is nothing but 4.5 pence. So 4.5 divided by pence, okay, it is, and the market price is around 1.8. so here, so it is 0.045, okay, pounds. That is the dividend per share divided by the market price of this is 1.8 pounds times the 100. So that is going to be equal to, so that is 2.5 percentage. So the dividend yield is around 2.5 percentage. The next one is the dividend cover. So let's calculate the dividend cover. The formula for this is, okay, what is the total net profit? Okay, so net profit after the interest was paid and after the tax was paid and any preference dividends paid. Okay, preference dividend paid. Okay, all this are paid, whatever is the net profit that was left over, and in terms of what? Okay, in terms of the total dividend, total ordinary dividend paid. So total ordinary dividend that was paid. So we can see that the net profit, you have to take the net profit after the tax and the interest are paid and any preference dividend paid with respect to the total ordinary amount of dividend that was paid. So this is going to give me understand how much of dividend cover will I have. Okay, how much of the dividend cover I will have in terms of the total ordinary dividend. So let's calculate first net profit after the tax and the interest have been paid. So that is going to be equal to, you take the net profit before the tax was paid, okay, before the tax was paid, and then you have to calculate what is the interest paid. First one is the interest paid. Let's calculate what is the interest amount that was paid. So we can see that there are two things. One is the redeemable preference shares, okay, whose interest has to be paid. So at the rate of 4.5 percentage on 50 million. okay, on 50 million. So 4.5 percentage on 50 million is equal to 2,250,000 pounds. Okay, this much amount of interest for the redeemable preference shares is given. Okay, and then you also have to pay a bank loan, okay, whose interest is at 6 percentage. Bank loan, so 6 percentage, okay, times the loan amount is 20 million. So which means the interest paid, okay, the interest paid is around 200,000. So this is the amount of bank loan interest paid. Okay, now let's add up these two values to get the total interest paid. Okay, so total interest paid is going to be equal to so that is equal to 450,000. 450,000. So this is the amount of interest that was paid. Now let's calculate, okay, what was the tax amount that was paid. So we can see that what is the tax amount that is going to be paid. So we will see. So first one, he is saying that tax rates paid on the profit for the year are no tax for the first 100,000 pounds of the profit after the interest. Now you take the interest, okay, you take the net profit after the interest you take, okay. What is the profit after the interest is paid? That is 800 million minus interest paid. The interest paid was this much amount, okay, after the interest was paid, and up to 100 million, okay, you take that much, and up to 100 million, first one it says that no tax for the 100 no tax after this first 100 million. So I am going to use that. So 100 million, okay, what is the 100,000, sorry, 100,000 you have to subtract, okay. For the first 100,000 there is no tax, so that is going to be equal to, 8 million, okay, 8 million minus 3,450,000 minus 100,000. So that is equal to 450,000, okay, 450,000 pounds. For 450,000. Now then he says profit after the interest is charged at the rate of 20%. So that is going to be equal to, So now the profit is charged at the rate of 20%, okay, after for the remaining. So 20% of, okay, 20% on the remaining, this 4,450,000, that is going to be equal to, 890,000, okay, 890,000. So this is what is the tax paid, okay, this is the tax paid, 890,000 pounds, okay, is the tax paid. Now we have to calculate, okay, the dividend cover. Now let's calculate the dividend cover. So that is going to be equal to, let's calculate the dividend cover. So dividend cover is going to be equal to, so the dividend cover is going to be equal to the net profit after the interest and tax is paid. So let's take the net profit before the interest was paid, before the interest and tax was paid, minus, you are supposed to pay the total interest of 3,450,000. So you will subtract that, minus, okay, the tax paid was 890,000, you will subtract that, you don't have any preference dividends paid, divided by the total ordinary dividend, okay, the total ordinary dividend that was paid is had already been calculated, interim dividend plus the final dividend, which was around 700,000, so 2.7 million. So that is going to be this much. So now let's calculate the dividend cover. So 800 minus 3,450,000 minus 890,000, that value is going to be equal to 3,660,000 divided by 700,000. So that is going to be equal to, 1.36 times. So that is going to be 1.36